Hey everybody, this is Brett. I wanted to just do a quick market update. Been an interesting week and a certainly interesting last few days with the Trump tariffs kicking in and surprising the markets a bit. So I want to give you some alpha and hopefully give you a couple tools to navigate the upcoming weeks and months. And my overall thesis is the bull run's still on, it's just delayed. Question is, do we hold here and go higher, or do we dump first and then push up again a bit later? So we're going to unpack that a little bit and give you guys some tools for navigating, like I said. By the way, I was just looking in the comments from last week's video, just a public service announcement. If you're seeing a lot of spam in the comments and people recommending OKX or giving wallet addresses or recommending Veronium or Verlenium or other obscure coins, I hope you know that this is spam, just to ignore that. I think you guys are smart enough for that. Anyway, with that, just wanted to dive in here, and thanks again, Max, for letting me show up on the channel and share with you guys. All right, so here's the chart of Bitcoin. We can see some heavy sell pressure in these red sell blocks. Basically, we just visualize what the limit buy and sell orders are. These have been remarkably accurate in kind of containing price. So as if you're new here and haven't been following a bit, I sold my last Bitcoin right around 106 in here. I can prove that if you want to, but also got stopped out a little bit more in this range. I knew 100K would be an epic battle with the longs and the shorts, but really it's the market makers liquidating longs and shorts. That's the name of the game, and that is their business. So we're in a downtrending channel still. Nothing's changed. We have overhead resistance around 88K. We can easily see that on the 1 hour, 4 hour charts as well. But the big news was this week, the implementation of the Trump tariffs. Nobody really knew what was going to happen. We saw an early day pump 2 days ago, and I guess that was yesterday, and we just kind of rolled. I'm recording this right after 8 p.m., so it's rolled over for the next day. But early on, there was a lot of enthusiasm. I was telling people, don't buy into this. The 50-day exponential moving average likely will reject, and we can see all the sell orders in there. So sure enough, it sold off end of the day. And midday, rather, the tariffs a little more aggressive than people were expecting. However, it doesn't really kick in until the 9th, I believe, which leaves some time and some wiggle room for negotiations. And the word on the street is that if these other countries will kind of play ball and reduce their tariffs, so will we. Okay, so read between the lines. This is probably a temporary thing. There's still the specter of, are they trying to purposely scare people or push people out of risk-on assets into bonds to help lower the inflation rate, and that's how the dynamic works there, so that the economy sort of falters, people buy more bonds and treasuries, etc., and then the ultimate effect would be to force the Fed to lower interest rates. I was looking at the FedWatch tool yesterday, or actually today in one of our other classes here. Let me just pull that up, and I'll share that with you guys at FOMC. Just go to the CME FedWatch tool. Is pricing in a rate cut almost, I think, 67% by June, but for May, not so much. So 67% that we stay where we are. However, these numbers can move around a bit, and if something were to deteriorate, we could see a surprise rate cut in May. I'm not saying we will, but we certainly could see that. And but moreover, probably going to be till the June meeting. So if I click over here, if this would work, they're pricing in. So this went down a bit, pricing in a 58% that they drop by June, and we'll just kind of have to wait and see. The market's sort of pricing in ahead of time, so we'd be hoping for a surprise rate cut a little bit earlier. We'll have to see what happens. I'll get to this chart in a moment. But for right now, the danger is, and I use that lightly, going up and down isn't a good thing, isn't a bad thing, it's just a thing, and that's how these markets work. This chart tells me, though, likely will roll over and head down, potentially. Deep breath, everybody, potentially down to the 70K region. That's where the buyers are lined up. Originally, Arthur Hayes had proposed this in one of his essays not too long ago. I didn't believe it. Nobody really believed it. But the charts don't lie. We're heading downward. I don't know what's going to happen here. I'm hoping that we are putting in a higher low. But again, all this sell pressure on Bitcoin and also the total market cap just really shows that there's quite a bit of fear out there, but also sell pressure. I don't, we can't really ignore this, and too many lines in this chart. Let me get rid of some of these. Essentially, though, the sellers are lining up ahead. We can see all these big red blocks. Support's been breached. This, are now potentially going to act as resistance. At least on the total market cap, we're seeing some buy pressure down in here. Total market cap, of course, including Bitcoin, Ethereum, and all the altcoins. So if we were to see, let's just take a look on the total too, which is everything but Bitcoin and showing Ethereum, etc. Ethereum has not been a good performer lately either, losing this trend line support. There is some buy pressure here, so it would appear that this is there is buy pressure on the alts and Ethereum. So maybe we have a little bit of an altcoin rally. Not seeing any other signs of that. I'm not advising buying anything right now, except for maybe Solana. I'm going to show you that. And seeing some nice buy support underneath of here. However, the more likely we're going to drift around a bit. Some people are calling for a much higher April. I think certainly we can see that if the Trump administration starts easing off on the tariffs, because this is pricing in kind of the worst case scenario. Certainly things are oversold. Seeing a little bit of bullish divergence on our RSI Pro on the daily on this total 2. So I'll keep an eye on that. If we jump over to total 3, which is removing Ethereum from the equation, mostly on the alts, not all of the alts, but I think the top 100, something like that. Seeing still holding the uptrending, long-standing trend line support, so that's good. That would point more toward some of the alts. I don't think all of the alts. I think a lot of these shitcoins, forgive my French, but a lot of these altcoins are not coming back. At least not this cycle. There are so many of them, and of course a lot of the money that retail would normally bring to these markets went into meme coins, and Solana was catching a lot of heat for that because the pump fund phenomenon that was basically people pushing out dozens of worthless meme coins on the Solana network using pump fund. So regardless, this is a much more bullish chart here, and so I can see this coming out of that, and that would mean, altcoins, again, some altcoins, I think the stronger ones. Compound showing a little bit of interesting signs. Solana also. So I'm going to be watching this very closely, and we'll see what happens, but I can see this bouncing out of this buy block, kind of pushing higher. It would have to clear the sell pressure around 900 billion, and of course break the previous all-time highs all the way back to about 1.13 trillion on the total market cap number 3. All right, hopefully you're still with me here, not trying to do any fancy math here. Total DeFi, I was hopeful DeFi would push up. It's not ready yet. We do see some buy pressure down below, so I'm watching Ondo Finance and Lido as some possibles there. I think I'm getting ahead of my skis here a bit. Let's go back to Bitcoin, and I think I've covered that pretty well. What we want to watch out for is if we start to lose this, say, 81K area, I keep lowering this trend line. We want to at least see either a double bottom or putting in a higher low to bounce off of and push higher. Again, things are oversold on the daily and weekly cycles, so when those align and start to bounce, we usually get powerful moves. I don't think it's quite ready for that. So, it's a good time to kind of sit on the sidelines. If you're in Bitcoin, if you're a maxi and a hodler, just hodl. One of the things I do recommend generally, though, is to sell half positions, sell a third positions if and when your trend line support starts to break, with the intent of buying back lower. So there's a couple trend line supports areas in here that you could look at, and that served me well. I was selling altcoins last week, and many of them bled out, and I'm actually buying some back because the dollar cost averaging strategy is a great way to lower your overall cost by taking partial losses. I know it's hard for everybody. Just get in the habit of taking partial losses, taking some money off the table. Preservation of capital is paramount so that you can buy back lower. So I'll pull up some of these altcoin charts here in a moment. But this is what we're watching. Things don't go sideways forever. This is either going to break to the upside or break to the downside. Just a little bit concerned, all that sell pressure. We need some kind of a catalyst to really push up and break above that. To be honest, I'm not going to feel fully confident in Bitcoin until it breaks and closes above this 110K level, just because that's where all the sell orders will have cleared out. All right, let's move on a little bit and take a look at Solana. I've been teasing you with that a little bit. Solana has this great trend or accumulation zone in the 110 to 125 area. I've doubled my Solana in my IRA by buying in this zone, the midpoint of these buy zones. It's one of our order block detector indicators, buying at the midpoint and then selling into resistance. Usually what I'll use is a modified Bollinger Band. So we've custom coded this. If you want to use an off-the-shelf Bollinger Band, perfectly fine. Just make sure you change the standard deviation from 2 to 3. I noticed that in the last cycle, Bollinger Bands weren't containing price. They weren't containing that price action. So I was just messing around. Change that standard deviation to 3. Works perfectly. So use that, check it out. It's excellent when touching the upper Bollinger Band. Typically, price will sell off. And similarly, as my friend Steve Neeson taught me years ago, when one side of the Bollinger hits, usually it will kind of go to the opposite extreme. Not always, but it's worth paying attention to that. All right, so let's turn off the Bollinger Band here just for a minute. And so on the upside for Solana, I've been buying in this 125 range. And I'll be honest, I caught up in the exuberance. The pump the other day, or 2 days ago, was pushing up. I bought some more Sol at 130 and didn't want to let it get away from me, but immediately recommended and realized and noticed, hey, this could be a resistance zone. And sure enough, it pushed right up to that upper trend line resistance. Did I sell it? I didn't sell it. I've been buying more down here at 115. So my net price on that, averaging 130 and 115, right around 125, 127, which is my buy zone anyway. Anywhere in these green boxes, I think Solana is going to be a strong runner in the next phase of the bull. Now, it is true there's still quite a bit of sell pressure coming up from the FTX bankruptcy. Some big players came in, bought a lot of that Sol out of bankruptcy, and those unlocks have been happening in March, but also April and May. However, markets tend to front run and price things in ahead of time. We started seeing that sell pressure all the way back here, and we can also see that sell block up here still there. But what I want to see as this sell block taken out, so what I'll be doing is selling some of this. I have my largest position and percentage of my portfolio right now is in Solana. I'm buying in this DCA buy zone. I have a stop loss of below 109. If we start breaking below 109, I'll sell half. And with the intent to have more powder dry, we could certainly come down to 95. We don't know if we're going to have another capitulation event, but those are the best times to buy. And oftentimes, things will bounce right out of there and you can be in profit overnight. I've done that a few times with Solana all through this, including back here on August, right around August 5th, where we had a big bleed out. And I had a feeling we were going to capitulate on Monday. So I put buy limit orders in all through this range and caught some of that overnight. Woke up in profit, caught a nice little pump. Solana is a great trading coin and also long-term, I think. Also, Fidelity just announced today that they're applying for the Solana ETF. So they're probably going to get it. Fidelity and BlackRock's probably not far behind if they haven't already. And I think they'll get that. This is one of those sell the news events. However, in buying into this, waiting for the pre-ETF approval pump, and then getting out a little bit ahead of that. That's what I recommend. Also, though, as a caveat too, always hold a moon bag with Solana. I originally recommended it in our newsletter on August 1st, 2021, and I said it will pull back from $38 where it was trading probably to support at $35, and that was our buy entry, and we nailed that. We did sell out a bit early, waiting for a pullback that we didn't get. Solana is one of those coins that can just keep going higher. So anyway, name of the game, take profits on the way up and buy the dips from there. So that's what I'm looking at for Solana there. In terms of anything else specifically, I'm not really getting into much. I have some powder dry and I have some other coins that are hitting long-term buy zones. Filecoin, Real Utility, they essentially are in the cloud decentralized storage space. However, while they're not, Amazon's most profitable segment, of course, is AWS. Not really a competitor, though. AWS is housing a lot of the centralized companies. Microsoft also has Azure, and they're competitors. But I think what's going to drive Filecoin is all of these AI projects, which are going to be very data intensive, storing all their data and GPUs. They'll want to store that on also a decentralized cloud storage platform. So check out their website, very cool website, but mostly what I like on Filecoin, Arthur Hayes also recommended it not too long ago, long-term support since 2019 along this range, and it's a slightly uptrending range. So I'm not financial advice, but I like this chart. I've been buying down in this range and recommending it at and around $3. In this buy zone, it's a very risk-favorable trade. Just trying to share with you what I'm seeing. Multiple take-profit zones on the way up with potential 40x returns if it goes back to the old highs, not even the all-time highs, even up to this range up here. If we were to see that, and not saying that's going to happen, but certainly possible, and multiple cycles in the future, or even I can't say they would happen this cycle, because from it to go to $3 to 850 would be basically a 300x. Those do happen, but not very common. And the market cap for that I think that's probably a next cycle, but I do have it outlined there. So just interesting. Either way, down in this zone, kind of attractive. I've been buying that around $3. Also kind of liking Aptos. I'm looking for long-term support zones because these tend to hold, and especially when there's buy zones down in this range. So Aptos also in an uptrending kind of support trend line there, and seeing some buyers there. I like Aptos. It's a good quality project. So let's see what else. A couple others I won't get into. Sui is kind of a competitor to Sol. Some are saying it is the new Sol. It isn't, but they have some interesting technology, and they're also, like Solana, in the transaction per section. All right, I knew I was going to blow that. Transaction per second sector. I was just trying for efficiency, trying to blend those words together. So what we see here with Sui is also kind of a trending parallel channel, but also it's holding at the golden pocket here. And typically when you see prices retrace, typically and often, especially day traders will use this from this high to this swing high, this swing low. Been a long day, everyone. This swing low to the swing high here. The retracement on that is this right in that range between 0.618 and 0.65. You can customize your Fibonacci's and save different settings. I have different templates here. This is the golden pocket. So when it comes down into this price range, also previous resistance flipped to support. So it's kind of an interesting support area on Sui. I've been buying a little bit. Again, that between the 0.618 and the 0.65 segment. You can pull up the settings like I mentioned. And 0.65 is not a default. You'd have to add that in there, but it's a worthwhile template you can add. So giving you lots of beta here today, you guys. By the way, if you like these videos, please like and comment below and subscribe to the channel, and so that we can get more of these out to you. Certainly appreciate it. A couple others I'm watching. ICP, it's beaten way down, but these are the times, when you can buy when there's blood in the streets. It is technically breaking below its long-standing upward trend channel. However, it has a little bit of a buy zone down in this region. If the rest of the market runs, this has some decent potential on a risk-reward ratio. Always use stop losses. Right, for this example, I'd put it right below this kind of local low around $4.80. So tight stops. There's a great tool in TradingView, by the way. I think it's this one here called a long and short. It's going to make this chart really messy, though. But what you can do is put that on there and push this up to where you think your profits could go, even to the upward side of the channel, and then lower your stop loss. And really, let me zoom in on that for a bit. So basically, if you think it could go to the upper edge of the channel and you have a tight stop loss down here, your risk-reward ratio, this is what you want to pay attention to. A risk-reward ratio, anything over 3, in my opinion, is worth taking the trade if you're setting your stop losses in a reasonable area. You don't want to set it all the way down here, because see that risk-reward ratio goes all the way down to 13. But if you put it right down under here, right below that at $4.80, and let's just kind of let's bring it down a bit. Let's say that it goes to this next local high at $20 right in here, a little more reasonable, still at a 14.5 risk-reward ratio. So that's a good one, and I think kind of worthwhile to consider. Helium is another one. Helium's had some ups and downs, broken down below its parallel channel. Not looking great on the chart, but if we double bottom in this range, prior resistance flipped as support, a little below here. So so the resistance flip support is down here around $2.40. Previously, $3 was holding. We've lost that, but we have a buy block in there. And that's kind of like, the Wizard of Oz. Everyone thought it was magic until someone peeked behind the curtain and saw that he had pulleys and gears, and there was a method to his madness. This is kind of what we can see when we have that ability to filter on these order blocks, because otherwise we wouldn't really know what's happening. We'd see potentially support at $2.30, but now that we can see buyers lining up, a little bit more attractive. Anyway, things like Ondo Finance in the DeFi space looking interesting here was really difficult to trade. We were trading it up in this range, and I had recommended it to our members here around in this range, and it pushed up to $1.50, $1.60, and then rejected and dumped. But at this point, there's a long-standing trend line, rising support trend line, and horizontal trend line right in this range. So while we don't have buy blocks lining up, it still looks pretty interesting to me and is oversold. I am holding some Mondo and looking to add to that as we go. Lido Finance, similar in that space. I had sold out of a Lido because it broke and lost this long-standing trend line support. So I don't know, but this could be a throw under and could recover. So when it gets back above, say 95 cents, maybe has some legs if we see DeFi run and start to improve. AI tokens like Render really just not performing well. And even though I was looking at this chart earlier today, if it dumps down to this range, about $2.60, $2.50, I would consider buying some Render for long-term holds. But, in this next move on the markets, most of the money is going to go into Bitcoin, and I think coins like Solana that have been around and really shown themselves, proved themselves. And let's see, let's look at Chainlink. Chainlink also not looking so good, but is holding long-term support trend line, long-term meaning into last July 2023, so relatively long-term. Maybe looking at a weekly chart, we can see to bounce out of here wouldn't be a bad trade up into this sell block. I'd probably sell a little bit early. It's still 100%, 123% on Chainlink. Chainlink's a long is in it for the long haul, but probably not the most attractive coin, but a safer coin in this next move on the bull. Now, Compound, I had mentioned, I thought I had it in this list. I don't really follow it, but it's been showing interesting moves here in the past few days. Had a pump out of nowhere. I'm not sure what that is. And clean this up here. So basically, though, looking at this, there is buy blocks down below. This is a weekly chart. On the daily, it's kind of looking interesting. Volume's real low, though. Saw some extra volume come in. Could have been margin traders just pumping that. So always wait for the end of the day close and use those Bollinger Bands, because if it gets above that Bollinger, invariably, these will pull back. Mark my words. Try it. You'll see. Especially when they're tight Bollinger Bands. Tightening Bollinger Bands usually means the move is coming. Volatility is lower and has contracted, and it will expand out of that. Depending on the chart, sometimes to the upside, sometimes to the downside, usually to the upside. But when the price gets above those upper Bollinger Bands, using that third standard deviation, invariably they will retrace and pull back in. We've color-coded ours. If it closes above the upper Bollinger Band, we put a vertical red line there, which also signifies good time to take some profits, and that things will be weakening. So I've mentioned before here, if you'd like more information about the indicators, you can go over to moonstream.io/maxsignals, and we have some ways that you can add those if you're using TradingView. Moonstream.io/maxsignals. These are the best I've used. I'm not here to really promote them, but I want to give you guys the tools to really stand out and benefit in this bull run. So to have an edge, because if you're just using RSIs and MACDs and stochastics, that's what everyone else is using, and you don't have any edge. When I was trading crypto in 2018 and really started to go in and trade a lot, I was losing money because I was using the RSI and stochastics MACD that I used to use when I was a stock and options trader, and that worked well. Doesn't really work so well by themselves in crypto. Anyway, with that in mind, anything else you guys want to see? I did check the chat in the last video, see if there's anything you guys wanted to look at. I'm not a big follower of XRP. A lot of people have it on their radar, and I just want to point out, XRP is not looking terribly good. I'm not a big fan of it because, XRP, the token, and Ripple Labs are two different entities, and it's not clear what the ownership is. And it's also not clear what the overall ownership by Brad Garlinghouse is on Ripple, because we know that he holds a tremendous amount of it. So at any point, not saying this will happen, but he's no Satoshi or Michael Saylor, let's be honest. Nothing against Ripple, but at any point they could dump a whole bunch of it and dump it on the markets. A lot of sell pressure up ahead. It's kind of sandwiched between some buy pressure here, though. So in light of that, it's sort of it's sandwiched in between both of those. Not really looking terribly great to me. I will touch on ETH. ETH, as I said, has not been performing well. You guys know that for ETH holders, and it's just been drifting sideways. Lost this support, this long-standing trend line support to the upside. When it lost it here, I was telling people to get out of ETH, also with this sell block. So a little bit of support here at around 1800. It's hard to say. With that, I did want to hop over, and before we hop off, on this Bitcoin study. You guys might have seen this before. It is my path to 150 to 200K Bitcoin, and some of the reasons that we could get there. I'm not going to go into that today. This is sort of questionable. We're waiting to see some things come back in and quantitative easing come back. And of course, this Fibonacci projection showing 150K to 200K possibly this cycle. I still think we could get to 150. Maybe 200s. Pompliano, I think, just came out and said 250. Really would need to see a lot happening, and I think that would start happening end of summer. The big traders on Wall Street, the old saying is sell and may go away. They all go out to their big houses in the Hamptons and sip pina coladas all day long and then forget about the market. And of course, these days they can get on their computer down the Hamptons. For the most part, the big money leaves in summer and comes back in early September. September is traditionally not a good month for Bitcoin crypto, but I think we start really pushing higher there if we start seeing, quantitative easing, lower interest rates. Also, it's worth noting that what could propel us higher here in the near term, let me just hop over. I wasn't planning to share this. I don't even have it open, so I can't. Global M2 has been rising, and we're generally a bit behind that. So, we could see this rally out of this area sooner than that. And all summer long, it's just typically summer, especially going into July, is kind of weak. So just to close this thought here, the study that I did from low to high on the last cycle, high to low on the Fibonacci, exactly predicted and projected the high of the market cycle. So again, using that same model from their most recent high to low, extended out the 3.618 Fibonacci projection, puts us right up around 200K. Not saying we get there, but it did forecast 100K at the 1.618. We got in there, chopped around a bit. Now we've come down to this line. The blue lines here, if you haven't seen this before, is this just maneuvered a bit to fit where we could go here. So I massaged it a little bit, but we have been setting maybe a third or fourth and final angle, which typically the parabolic blow off top will see, kind of like 2017. So with that in mind, and again, I've massaged this a bit, a little bit of fudge factor, but we're still in play potentially if we can start pushing off this trend line, break that previous high around 110K, probably consolidate and retest that as support, as we often do. So breakout, retest, and then resuming that trend higher. That's what I would expect to see. Then we can easily push up to that 150K level. And then, as we also see typically in these bull market rallies, is a bit of a retracement. So that would be a good place to start taking some profits off the table. Let me see if I can draw this. TradeView doesn't like to let me draw indicators on. Yeah, there we go. So, let's say a 20% pullback in that range, or even down to the trend line of 22%. If it came down there, we'd still be fine. Bull markets, these are common 20, 30, 40% pullbacks. We've seen in the past even up to 50%. And so with that in mind, pushing up higher and then breaking up, chopping around a bit, maybe touching 200K. Guys, I'll be selling in those ranges, easily selling some at 150, more if we start seeing our signals roll over, maybe buy the dip one more time. But if we get anywhere near 200K, 180 up in this range, probably want to take some chips off the table and hold a bit of a moon bag. But that's how I'll be playing this and watching for any potential breakdowns on this this angle here, which if we redraw it, is still in play. We could still see this, and any rejection of there, probably want to be getting out, waiting for a bounce off of this other trend line. Usually we'll see a counter trend rally, a bear market rally, just like we did in 2021. Everyone thought things are fine. We came down here. Everyone said, oh no, it's going to buy the dip. And then everyone was buying this like crazy, thinking we were going up higher, and it wasn't. So just keep that in mind, and be ready for anything. But that's what I'll be watching for. And we'll be talking about. By the way, if you'd like a free trader success checklist, we've just updated our trade success checklist. It's gamified, it's interactive. You can kind of scroll through here. We have some of our indicators. We have some other chart patterns that anyone can look for. It's really breaks down trading into pattern recognition. So if you have the 21 EMA above the 50 period EMA, or if price is above the 21 and 50, this inflection point, usually a good one. You can put a check mark right there. And down the bottom, it'll give you a trade success score. It'll advance this. The more checks you have, the higher your trade success score. Like a bullish engulfing candle right there, you see that your trade success score went up. Usually above 2 or 3, I'm buying the trade. And then if I get up into 4, 5, and 6, I'm adding to the trade. Anything above that is to consider putting even more in. Candle body above trend line support. You guessed it. Give it a check mark. Trade success score goes up. And that's sort of mixed in with some of our proprietary signals. But here's that Bollinger Band that you can use. Is the Bollinger Band as it recently pushed off the lower Bollinger Band with that third standard deviation. Remember to make that change. And that's a very bullish signal. And there's other patterns here like the 3 inside up that you can use. And in conjunction with our signals, if you happen to have those, like those buy limit orders. And again, if you have a trade success score of 3 or 4, I'd be getting into that trade or breaking into a new parallel trend channel. I like the simple signals, not the complicated ones and the fancy Elliott waves, this, that, and the other. So where you can get that, so by the way, is if you go to moonstream.io /free checklist, you can download that. Just a free tool you guys can get your hand on, and actually you could do that. I thought there was another one. Let's see, or you can learn more about what we do at moonstream.io. Cool little video here. I didn't mean to throw so much at you here. Let me just see where the moonstream.io / maybe it's just checklist, and you can give us your info and we'll send it to you. Make sure you download it. There it is. Make sure you download it and open the PDF to make it interactive. That's the only thing with that. So you can check in there. So we're here to give you the tools to help succeed. And again, special thanks to Max for allowing us to hop on here. And hopefully that was helpful for you guys. If you'd like to post down below, I am skimming the comments from time to time. Anything else you might like to see, just let me know. And I did want to show you one more thing, actually. I forgot. So let me hop in here. This is an interesting study on the IBIT. Let me open that up. This is the IBIT 4-hour. I noticed quite a while ago, we've been tracking the IBIT since it first started, all the way back here when it was just a baby in Jan of 2024. I had a little cup and handle breakout. Started noticing these gaps similar to CME gaps, and I won't go into what they are. It's sort of a fair value gap. The market makers and on the CME, they tend to pull price back into those areas to sort of complete you can Google it. There's some studies on this, but essentially these gaps on the CME tend to fill. Now that Bitcoin's a Wall Street product, like it or not, the IBIT trades on the CME and as well as the futures and the options. And so these gaps were giving us a leading edge for where price would go. So how to read these: if there's a gap in this, it acts as a magnet to pull price down or up to fill those gaps. All of these gaps had filled to the point where I started proclaiming these are 100% accurate, knowing full well they would stop working exactly at that moment, which they did. So we have an unfilled gap down here, but all these ones in yellow have filled. So there's a couple that haven't here, right around this one, 36.29, but there's some bigger ones, and this is what I want to pay attention to because these are unfilled gaps in red. There's a large one down here, and I'll get to that in a moment. But when this gap formed on the IBIT, this was back in November of 2024, markets gapped up a lot and ran. These happen after hours, after 4 p.m. Eastern, when U.S. markets are closed, or over the weekend. So that's why there's, call it a fair value gap. And so basically there was more demand than supply. It opened up higher. And I was saying this would seem like a place where we could pull back, a price could pull back. Again, it acts as a magnet. Just to visualize that, I'll put that right here. And oops, we don't need 2 of them. But let me show you what happened. I was like, I don't know, you guys. I don't think we're going to come all the way back down to those levels, but sure enough, what's been happening over the past couple weeks, sure enough, look at this, boom, we have come down and filled this gap right here. So I marked it as filled. We have an unfilled gap down here a little bit lower, and look at that. We also have some buy pressure. So this is going to act as a magnet, you guys. This one's already mostly filled. It just touched, by the way, look at this. It just touched exactly to 44 and change to fill that gap. You think these don't work? Look at that. So question is, does it pull back here to double test? It certainly can do that. We saw that on the Bitcoin CME gap recently. And the question is, do we come all the way down here to fill this gap? I don't know. I don't know, you guys. That would be that would coincide with Bitcoin 70K. That would be about 10% lower than where we are. So actually, let me leave that on the chart because, that certainly could happen. But that would be an amazing place to start buying if we go lower. And if you have some powder dry, make sure that you have your stop loss limits at least in your mind or set as alerts so you can take some off the table to buy back lower. But certainly also possible that we just retest this area, which would be 78K on Bitcoin. That was where the CME gap was, and then boom, rally out of that. All right, so hopefully that's helpful, you guys. We'll talk to you again soon. I'm back in the saddle here and in the office, so we'll try to get more of these out for you. All right, cheers, everyone. Have a good one. Bye.